Welcome to the Property Nomads Podcast. Delighted to be joined by Marc Champ from Wharf Financial. Marc, of course, recently contributed to Property FAQs, which is out and about. Go and grab it on Amazon. It's been out for a week now. Thank you everyone for your feedback on the book. It's been a big success. And of course, we couldn't have done it without Marc's fantastic input with the questions at the end. So, Marc, you're in France, I believe, but thank you for your contribution for the book, and bonjour.
Bonjour, ça va?
Ça va bien, ça va bien.
Excellent. Well, yeah, thanks for having me on. Yeah, like you said, I'm in Cannes at the moment. We are at the MIPIM Property Festival. And for those who don't know what that is, it's a festival that happens every year, other than in lockdown, where the property world descend on the south of France, and there's a lot of networking, meet new lenders, you meet solicitors, accountants, everybody in the world of property, and it's just refreshing acquaintances and making new ones. So it's very good.
Networking is important. So happy days. So we'll crack on. Not really a lot to report this month. I know that from the previous month, of course, Russia's done what Russia's decided to do. Have you seen an impact in terms of the mortgage markets, the lenders overreacting to it? What's the deal at the moment?
If anything, it's a bit of a strange effect, because what we were expecting was a rate rise, and we were talking about rate rises in previous editions of this. But what we see now is inflation is obviously going up, as we've seen, and I think they're now expecting a peak in October, November time, rather than April, May. So that's changed slightly. And would we see a rate rise? And it's a good question, because with all these material costs going up so much, and energy prices increasing because the supply could potentially be damaged, even though I think we only get something like 4% from Russia. Household bills are going up, so to increase people's mortgage payments is going to be a double whammy. So I think it'll be held back a little bit. Hopefully the world will calm itself down, and hopefully we'll be able to keep rates lower for a little bit longer.
Well, let's see what happens. Like I said, we'll go back to our predictions at the end of the year anyway. We had some great feedback from the episode with it's Andy from Lendinvest. In terms of, sorry to put you on the spot with this, but in terms of everything that's going on in Russia, Ukraine, etc., I've been reading there's been a bit of an impact on ESG and that philosophy. Have you seen any reaction from lenders with regards to green lending at all, or is that something to deal with later on in the year?
We've not seen a reaction. I think already in place was an initiative to force the green lending into the customer's mindsets, and with the changes that need to happen by 2025, I think it is, they're very much bringing it to the fore now to prepare people, and you are seeing discounts on rates for those that are classed as green homes, and I think that will just be ramped up in time. I think the green issue gets pushed further forward by the Russia problem, but have lenders actually done anything different? Probably not. I think it was already part of their plans. So yeah, I don't think it's made a massive difference. But yeah, it's just on the fore of everybody's mind.
Okay, perfect. On the radar, not an issue. I'm sure, again, that's a subject we'll touch upon moving forward. The only thing I've sort of got from my end, appreciate it might be a bit of a quick episode, this one. The only thing I've got from my end is having a look around property groups and whatnot online. It seems a few people are not overly happy with values at the moment. Quite a few people saying that there's been quite a few down valuations. Is that just people erring on the side of caution? Has that got anything to do with events in Eastern Europe? Any thoughts on that?
So the question is, what is a down valuation? Is it that a property investor, purchaser, whatever, have overestimated it, or is it that the value has gone you know what, I really want to penalise these people and put a down val on it. So it's a very difficult thing to quantify what is a down valuation. So I was talking to a lender only start of last week it was, and they were saying before they even look at any transaction, they look at comparables online, and they are able to see what's going to be overestimated straight away, and it's obvious. So yes, we do see down valuations, but are they actual down valuations? In some circumstances, yes. In most circumstances, no, because the comparables put forward by the lenders, not by the lenders, sorry, by the valuers, usually are able to justify their findings. And if you think at the moment, the market was so hot last year, especially up to the stamp duty holiday ending, it has to relax a little bit. You can't keep going up and up and up and up at a rapid rate. So people thinking, you're going to get 10% growth every year on your property, it doesn't happen like that. And maybe the values that were, that are feeding through now on net house prices and so forth, they're probably from pre-stamp duty holiday, or when the stamp duty holiday happened. So they're slightly inflated, I think. So, yeah, there will be down valuations, but I think more often than not, it's an overestimation or looking at the wrong data in the first place.
That's a good way of looking at it. I hadn't actually considered the other aspect of that. Very good point well made. Just goes to show, do your homework, do your due diligence. It's important. Finally, something that you and I have discussed sort of off record, but I think might be quite useful for people that are getting into this field of work, Mezz Finance. So just a very brief snapshot of it. What is it? How does it work? And how can Wharf Financial help in that regard?
People think of Mezz Finance as an exotic product, and it isn't. It's very bog standard, boring, but it does have a use, a very good use, but only in the right hands, I would say. So if you can imagine it, it's just like a second charge, really. You borrow your first charge, but then the second charge is the Mezz lending. So if you're doing a development, the Mezz just sits behind your normal lender and just gives you a little top up. And that little top up, because it's higher up the risk curve, it's the bit that would default the first, and it's the bit that would be attacked the first. You have to price it as such. So instead of paying like 0.7 or whatever, or 1% up to 1% for your refurb or development loan, you're going to be paying nearer 2% per month for that part of it. So it's in essence a second charge in the development world, and it's really quite simple, but it's really important. Two things: one, to find the right lender to work with who will want to allow a second charge or a Mezz behind it, or the other thing to bear in mind is you need to understand that you're borrowing a hell of a lot compared to the value of your property. And if anything goes wrong, you haven't got much wiggle room. And they're going to be, they'll work with you if you get the right lender. It's important to pick the right lender, not over borrow, and make sure that you've got enough assets and funds in the background to be able to cope with any fluctuations, because it can happen pretty quickly up that end of the risk curve.
And that's why it's imperative to pretty much work with the same broker on both looking at first charge lending and Mezz Finance. Is that correct?
Yeah, you can do that. Yeah, there's Mezz lenders who work well with certain first charge lenders, and a broker can pick that out for you and pair them up. So you can even just go to a broker, they'll find the first charge lender, and the first charge lender may have preferred suppliers of the Mezz that they like working with, because it's the legalities that lock the first charge and the Mezz lender together can be quite difficult, because all the wording has to be agreed, and who sits where in the priority order, what the triggers are to kick in a default, all that sort of thing. When there's two lenders on it, it becomes a more complex deal, hence the pricing, and it's very difficult on the legal side to make sure who's ranking where if anything were to happen. So getting a lender who's experienced dealing with mezz behind them is important, and a broker would be a great place to start to find that partnership.
Perfect stuff. I appreciate that. And again, for people out there that are looking to do that sort of thing, we always recommend have a chat with Marc. Your details, of course, are on the show notes, as they always are. Marc, nothing else on my end. Anything else of importance your end at all?
Well, I know you put this podcast out to thousands of people, and we want questions. So we want to answer the questions of your listeners, and hopefully we can answer them and feature them on our social media and make sure that we're providing the content that people want to hear. So really welcome questions coming in. We would love to answer them for you.
Perfect. Well, I'd recommend call to action. I'll send them across, or I would send them across to Marc, or do send them across to myself. Again, we're here to help and here to serve you. Marc, thank you very much for that introduction to Mezz Finance. Look forward to the next time we record this. I'll be in Mexico, so my background will be equally as good as yours at the moment with the sea. And
I wonder where I'll be. When's the next one recorded?
Probably towards the end of April, so I'll be in Mexico City.
All right, I'll find somewhere.
We'll have a competition for those on video. We'll have a competition. See who's got a better background. Marc, enjoy France. Catch up next month.
Thank you very much.